any particular investment security or portfolio of securities, transaction, or investment strategy is suitable for any specific person. In other words, we are not a registered investment advisor. If you'd like that, you can find plenty of them in the phone book. We are a technology company. And so, with that disclaimer out of the way, here's Dan Mirkin, and I've kicked off the recording, so you'll be able to find this later tonight or tomorrow in our YouTube channel. Dan?
Scott, thank you very much for the kind and warm introductions, and I want to thank everybody who is attending this webinar. I'm kind of hoping that you will finish this webinar realizing this is one of the most important, impactful webinars you've ever attended, because we hopefully will really open your eyes. So why are you listening to me? I always like to point this out because when you're on the internet and today with technology, it's, there's this question of what is or is not the truth. But before there was any, internet and stuff like that, before the Google and the browsers that let you access anything, you had the good old-fashioned newspaper. And here I am in 1996. I'm 3 years out of college, and I've started to really gain an understanding and a feel for the stock market. So I've been doing this again since '96, and I'm 46 years old. So this is my 20th some year of doing this. And through all this time, we've learned an immense amount. Not only that, but what we're going to tell you is that almost everything that you know about the stock market is completely wrong. And that's hopefully what's going to change your mind about how to capture profits and how we can work together to elevate the whole game. So the things that I'm going to show you, and I'm going to introduce you to Trade Ideas, our firm, but it's important to know a little bit about the history. My partners and I, the people that founded Trade Ideas, were originally involved in a venture-funded technology firm to compete with the Goldman Sachses of the world in execution. The company raised $50 million, but then was hit by the perfect storm of the dot-com bubble and 9/11 happening literally at the same time. So while that didn't work out, my core team learned something about how to succeed through the bloody noses of failure in a way that most people never have. And we took that knowledge and transformed it into what you will see today as Trade Ideas. A completely different way of solving the what stocks to trade problem. So some companies already work with us, and you can see some of them at the bottom, but no company has the technology that I'm going to be showing you today and the methodology for why this is the only game changer tech. So this is a little bit of background and history about what we've been doing as a company, just so you can kind of get an idea. We came to life in 2003. Okay, no institutional customers, no nothing, and we just grew by ourselves through word of mouth, through innovation. And in 2005, 2006, we realized that there was this opportunity to switch from B2C to B2B and sell our technology to large brokerage partners. We sold to E-Trade, we sold to Scottrade, we did a project with TD Ameritrade for automation, because again, my partners and I, we bring that skill from the previous venture. It's like people get $50 million executives for free. And here's basically a decade where we're working on our technology, working on our innovation, continually expanding what our product can do, just pushing, pushing, and pushing. But in terms of selling to the subscriber, we're not growing because we're primarily selling to the broker. Okay, and this went on from 2005 till about 2015 when we realized that the real power, through some circumstances, we realized that the real power for us was to go back to what we did originally and sell directly to the consumer. Not only that, but that coincided with one of the biggest technological leaps forward that I'm going to be showcasing to you today, which is artificial intelligence technology that tells you which stocks to trade based on the numbers. So This is, again, just for you to be able to have perspective, gain some historical knowledge of what we do. The other important thing that changes trade ideas from a typical vendor is that our technology, in essence, subsidizes a lot of what we are able to give to our clients for free. So one of those things is a vibrant, free trading community that focuses on the way we present data via our software, but really it's people and a meritocracy led by Barry Anderson, who's the lead moderator of this trading room, from the open to half hour before the close. And this is for everyone to share ideas, to have resources to be able to answer questions. You can see there's tabs there where there's technical support and announcements and things like that. So it's like this software is alive. It's not just something you download and like, hey, what's up, and look for an update later. There's a whole vibrant, living piece of this technology that works with you. So we're going to talk about what is artificial intelligence, and it's so important for you as listeners to kind of get the grasp of this, because this is what I'm going to show you is what sets us apart from every single other product, from the trade stations, the e-signals, the TC2000s, and every single other vendor out there. We've all, in a theory, been lied to because, well, I mean, it's kind of complicated, but let me just say this. If you think about who is vending stuff to you, the vendors are primarily indicator pushers. In other words, they can't really innovate because they haven't thought about ways to innovate. So what they do is they come out with new ways for individual investors to chase their tail. This is what we talk about why, if you want to profit in 2017, you really should forget everything you know, especially about indicators. Indicators is the ultimate ruse that's been thrown on the individual investor, because the idea is that, well, maybe it's not this indicator, but the next one is the one that's going to work. Okay? So we're going to completely show you how that's not the way it's done. And the other thing, and I'm going to kind of pause here to jump right into the technology, is that most people also don't know what's possible. So we aren't about, Ichimoku or Kelter or McClellan or Bollinger or McCarthy or Putin. None of those indicators work. But what we are about is a game-changing way to ask the right question quantitatively. You guys have all heard about the algos and the quants. Well, we're the only firm that brings this technology to you so that you have the advantage over everybody on Wall Street. So let's jump into it. What I'm going to do is I'm going to minimize the presentation. We'll get back to it. There's a lot more stuff there. But, oops, let me just minimize right there. And I'm going to show you a screen. This is my desktop simplified. Let me just make sure, is everyone able to see what I'm showing you here? Just want to make sure you can see my screen. It's just a chart and an alert window. Fantastic. So if you look at the title of this window, this is the part where I talk about we are the only firm that asks the right question in the first place. Well, what stocks are we going to trade and why? So let's talk about some of the things that we've heard out there in the ether. So for example, you've heard, of course, that the 200-day moving average is an inflection point. The stock can either cross above its 200-day moving average and it can mean something, or it can cross below its 200-day moving average and it can mean something. Our technology, which is server-based, allows you to see when these events happen in real time. So when I go to history and I look at today, you can see that there's quite a bit of stocks that were crossing their 200-day moving average. Here's Lululemon, here's SLV, PPG, etc., etc. You don't need to see it on the chart. That's not what because that's not what's going to help you. But I do want to show you that, notice the timestamps. Our software It watches the event, 200-day moving average, for every single stock out there. And so because we can do that, we can then ask ourselves the critical question that no other vendor in fintech can ask. So what happens to GNW or other stocks like GNW after the 200-day moving average? Is this a good signal or is this a bad signal? Well, to do that, let me kind of open my screen to show you that, first of all of Trade Ideas technology, remember, we've been doing this since 2003. So everything you see is something that you can customize. So I'm going to go to Configure, and I'm just looking basically at stocks that have crossed above the 200-day moving average that have traded and at least 1 million shares a day over the last 5 days. Very, very simple stuff. Okay, and you can get more detailed. You can put in, for example, minimum of $10 hypothetically and maximum of $100. You can customize it any way you want. And this stuff is not necessary to know right now for this demonstration, but just the idea is that very powerful customization is available. So I hit OK, and now I'm back to my window, the 200-day moving average. So the way that we want to be able to help investors is to be able to automate what they would have to do by hand. So typically, and again, I'll go back to the history, an investor would have to look at, as each one of these happens, kind of see, what you want to see. And by the way, in Trade Ideas, there's full charting capabilities. So I can chart at the same time and kind of make it any way that I want to make it. I can see the visuals exactly the way that I need to. So you can cut a lot of vendors by using our technology. You don't necessarily need charting vendors anymore, and we do all the real-time data. So here's Lululemon, and this is an inflection point. The question is it a good entry? Okay, same thing here, SLV. So you can see it's been coming out of, this downtrend and crossed above its 200 days. Is this a good entry? So let's talk about how we answer this question. Okay, so here's how we do it. Okay, I have an option here called backtest strategy. And the difference is that instead of writing some complicated crap that you would have to do on every other platform, like if-then statements and all this stuff, we use logic and simplicity. First of all, we talk about when do you have the time to trade. Like, for example, a lot of our customers are doctors, lawyers, plumbers, truckers. I mean, every occupation around the world. You might not be there at the open. So you might only be able to trade, I'm on the West Coast, so I'm going to say maybe from 8 a.m. to, let's say, 10 a.m. And after that, you're busy. You only got 2 hours. So not only do you have to know if this 200-day moving average is a good signal or not, but you have to know, is this the time to, is it a good signal at the time that you're trading? So let's talk about the exits now. Look at what you're able to do. You can hypothesize something basic like, I'm going to hold it for 30 minutes. So let's just see what happens. So we're going to talk about our entry between 8 and 10 and holding it for 30 minutes. That's a question that we're going to ask, but we're asking it for the entire market within our parameters. So now that we've done this, we've ran through 276 quote-unquote paper trades. Okay? So what this is basically a simulation that ran through a hypothesis and said, your idea of buying the 200-day moving average is okay. It's not great at all because your odds of winning are less than 50%, and your average winner is only 2 cents bigger than your average loser, you're going to get eaten alive on the spread, which is why your equity is going to go down. So we allow you to model things that actually happen to you, like, for example, commissions and slippage. So here I am not only trading these signals, but I'm also saying, well, what if I'm not getting executed and I'm losing 3 cents aside just on the execution? But maybe my broker because I'm very active, says I can trade for $2. All sorts of different things. What if your equity, of course, is not 10 million, but more like I was doing this for a hedge fund, but maybe instead of 10 million, your equity is something like 40,000. Okay. Now you see why you would never do this. So we just answered an important question. For your time frame, the 200-day moving average, it's not a good idea. And the problem is, and here's me talking about the lying and what you've been told by other vendors and technology in general. I mean, this whole meme of buy and hold and long term, it's really a disaster for people who want to be active in the markets in general. But the problem is information is coming and being processed in the market faster and faster. Twitter, stock twits, volume, everything is changing. We're getting better at seeing things, okay, and asking the right questions. And as a result, the traditional tools that you have been using, like moving averages and relative strength, tools that were designed decades and decades ago, but are still being pushed on a public that is so hungry for some kind of an edge, any kind of an edge. But of course, that part is the ruse. But this is real, okay? Because this tells you what happened. From a daily perspective, you can dive into all the days. You can just go in and see why, did something happen? You can modify, you can adjust your settings, but the best part of it is we've already done all the work for you, so you don't even have to. But let me just get, again, back to what I was doing. Here's the window, and we did the back testing where we said, what happens in 30 minutes? Okay, but let's face it, 30 minutes, that's day trading, which I'm not a big fan of because, let's face it, not everybody can be glued to a computer, okay? So what about swing trading? How about 2 days or maybe 5 days? Let's try that. Kind of a different story, isn't it? Isn't it nice when you can ask the right question and get a better answer? So now you realize that while you can't time it on the 30-minute, it's way too noisy, the 200-day moving average on the swing side has actually been doing quite well. Notice I did this. There's no optimization. Of course, the market's been running. You can see that. But at least I'm giving you an answer to a question that you otherwise wouldn't have had. You have to know how to be able to stay in it the right way. Or you have to at least control your risk enough not to jiggle out of it every 30 minutes because it's too volatile. 30 minutes, too much noise. But on the swing perspective, now you're in business. Do you see what I just did? Do you guys get what I'm getting at? Think about how many times you would have to have observed this, paper traded it perfectly, written everything down, the time of day, etc., the kind of note keeping that you would have to do to understand that this is the option. And here you can run it again and say, okay, 4 days, wow, that's a lot. Maybe I don't like that much. What about 3? What about just 2? No coding, just simple stuff. And look, now I've just saved you money because you realize you don't have to even hold that much to get some of the high percentages. Now you can turn yourself over more. This is why we are so different and why we've approached the data problem in a different way. While everyone else is trying to, again, give you another hammer or another saw or another drill, we are the method. This is the method. The method is observing and applying hardcore server-side data analytics to see what's actually working. Where is the pocket of probabilities? This you are not going to find anywhere else in finance. The calendar heat map. the dollars, the share size, the commissions, the slippage, this ability to do all of this. I'm doing this one-handed. I didn't, write any formulas or codes. Look, I can see the calendar. Did I do well on a Wednesday? Am I doing better on Friday? You can see everything. And you also have the tools to optimize even further. So all of this is available, and notice there's no place that you need to code, no if-then statements, none of that BS, because you don't need it. We've done it for you. We're the technology firm. You don't need to be. The key here is you have to learn how to actually invest and be able to manage the risk. Okay? So I'm going to do another quick example, and then I'll show you what we're all about. So here, just a reminder, you've got charting. You've got the streaming analytics. I can take any window, I can duplicate it, and I can reconfigure a signal. I can necessarily, let's say, go to modify this one, get rid of it, and search for the 20-day. And all I'm doing is writing 20, and there it is, cross the 20-day moving average. I'm going to add this alert. I can use both, but I'm going to add this alert and make the summary is the 20-day SMA a signal. Okay, so here we go. Similar concept, but just different stocks, different price action. And we'll do the exact same thing. Here, we're going to do on the timed exit for a day after tomorrow. Look at that. You're getting some very good information that you otherwise wouldn't have had. And notice how many simulations you just did. And all of it is happening by itself. Like, you're not sitting here coding and, looking over. This has all been automated. Now, many more trades, because the 20 is shorter time span than the 200. We just ran through 1,100 simulations. And again, seeing that, hey, not that bad. Let's try it again for the intraday time frame. Maybe we can go even shorter. Nope. Doesn't look like that's a good idea. So look at, in this short example of just this webinar, look at what I've shown you. Again, the whole concept, how tricky it is to find good day trades and what kind of technology you actually might need to really be able to discover alpha. That's what we're about. This kind of curve, the one that goes up. Okay? So let me show you now how we've not only have all the tools and everything, all this customization, but there's something else. We have a way for you to be able to see the data in an environment and in a methodology that's simple and, again, easy to get you to the path of least resistance. So notice here we have what's called the Trade Idea channel bar. And our channel bar, just like what you might see on Netflix or Spectrum or any kind of media environment, is a way for you to navigate where you want to be. Here's a channel that we created recently called Alpha Predator. And alpha is the way that the financial markets describe doing better than the indexes. So this software right here, this channel, uses our technology in a proprietary way to search for alpha. And here's what alpha looks like. For example, a stock that had some potentially good news, then something terrible happened, but all of a sudden it's starting to get digested and changing the trend back to the positive. And look at here, you find it as it's just starting to take place. Okay? That's what we call alpha. Look at this behavior again. Notice that it's that similar, the recovery. And of course, this, to just explain, if you think that this is all kind of, sleight of hand, look at the kind of returns that are possible in the stock market if you just expand your eyes and forget the stuff that people are trying to shove down your throat. All this stuff about volume and having to have millions of shares traded. It's lunacy. Look at what's happening to stocks that trade 100,000 shares a day. Look at this. And this is a daily, okay? So this isn't like some move that happened in one day and then retraced and you couldn't be in it. Look, 1, 2, 3, 4, 5, 6, 7. Okay, a gap down, but then 8, 9, 10, 11, 12, 13, 14, 15. 17 days in a row positive. That's what we are about. Showcasing this versus constantly chasing your tail with the Netflix and the FANG stocks. This is what we're doing here. We're bringing evolution of the game. Okay, imagine for a minute. WKS. You don't have to be an analyst and understand what the company does, but just hypothetically look at it all more from the human point of view. Look at it from a behavioral point of view. Let's say, for example, that you're looking at a person who, and this is their life chart. They're okay, they're hanging in there. All of a sudden, they're getting sick. I'm just kind of speaking what I see. They're getting sick, trying to rebound, sick. Oh, is it dying? You don't know. Sick, but then all of a sudden right here, if someone was going to say, okay, doctor, what's happened in the last, 13 days? Well, they're still not feeling good, but there's some stability. So this is the kind of stability creates the opportunity and the potential that we want to be a part of, because look how quickly it went from 7 to 3. It can go back up just the same. So how do we know when something's up? So here's what I'm going to do. I'm going to right click and I'm going to create a price alert. So everything that I see on Trade Ideas, I don't have to just sit there and forget about it. Our own software lets you create an alert and says, oh boy, I love what this looks like. Stream of consciousness versus if-then bullshit. Now, not only do you have it, but it's marked. So if I go to this stock, but then come back to this one, there I am. There's my signal. And let's say, hypothetically speaking, I just changed my mind. I did some research and I say, you know what? I want to go right here. It's only 37 cents. Now, it's a real move. It's what's called filling the void. This painful void on this candle right here. Okay? These are the ways that you really capture alpha. And our technology, look what it did today. Look at this edit. Here you have a stock that's flatlining for approximately 3 hours, and then just boom. These are the things that this window shows you as it's happening. That's the key. And even if you're scared of something as volatile as this, there's always the slightly different ones that once you zoom out, you really start to see, whoa, look at this potential. Look at this stock from 8. What if, ask yourself, what if you're lucky enough to catch it on the rebound? That's the kind of thing that you have to see in your mind versus just going to Netflix and say, okay, great, I bought it and held it. Listen, you can do that, and we're not talking about 100% of your assets being traded actively. But for the active part of investing, okay, 100 to 142, you can't compare that to 8 to 14, or even 100% right here. So we're talking about just better percentages. These don't have to be the stocks that you stay in forever. You see what I was talking about, that move where it turns around? Look at this. Look at this bottom that was caught here. If you were, again, able to react and manage risk. And that's the whole thing. In active investing, the way people call it trading, active investing is simply a process of being able to understand risk and manage it. And in our channel bar, you can search these kind of risk options in many different ways. Like we connect to social media so that we are not only tracking the tape, we're also tracking unusual social activity at the same time. There's nobody doing that because we've done this technology since 2003. Everything is sortable so that you can constantly get different looks. we've been talking about stocks that become very active because their float, how many shares are available to trade, are small. These are very big opportunity stocks because they can just turn over quite a bit, and hedge funds are not allowed to mess around with them. This is why it's so important to have access to this technology. And it's only a matter of simply taking some notes. We specifically wanted something that was easy enough for ourselves to continue to use without ever having it grow kind of like out of your abilities. So often you have to find a programmer or somebody else to theorize an idea. Not with trade ideas. You've got it all done in a way that you can, workflow around it. Here you have the pre-market. As soon as something's happening, you can see what's gapping up, what's gapping down. As soon as the market opens, you can jump to surge, which shows you where the volume is coming in, or where we just were, social media. But of course, you can go further. There's the options data. We not only watch stock data, but we also monitor for unusual stock options behavior and movements in stocks where the options behavior is also unusual. And again, it's all on the channel bar. Notice that whenever I click on something and it's activated, you see the ON button. So because of the recent election, you have the infrastructure plays that we've put in. China, just an example. Tons of opportunities to break things apart in the ways that you want to see them. What about, for example, earnings? Okay, we have after hours. We have our trading room. And where did our earnings channel go? Here it is. Just so that you understand that we have no affinity towards any kind of technical, fundamental, anything. And neither should you. The affinity is what's working. We statistically monitor the data underneath every single stock in a way that no other company in fintech is doing today. No other company, and not on the scale. Because the reason we're able to do this is we're watching everything. That's really one of the things that separates trade ideas from everybody else. So while some people, like if you subscribe, for example, to eSignal, a lot of times there's data limitations because you can only monitor 500 stocks at a time or 1,500. But not with trade ideas. We monitor everything, and that way the critical phase of any stock goes from when it's not active yet to as it becomes active. That's when it pops out. That's when we show you it's happening. Okay? And that's what it looks like. I mean, look at these again, opportunities, the percentage opportunities that are available in the stocks that are ignored by the industry. No matter which way you like to see the data, we have the most dynamic and engaging views for you so that important things stand out. Notice, again, we're tracking things in custom timeframes, like what's up the most over 5 minutes on the server side. So when you pull something up, you can tell that it's going to be moving in the right direction for you. And then, once you see it, your eyes will give you a very quick read, like right away, my eyes, okay? And this is no faking, I'm just saying this right here, time to buy. It's that simple. Because at that point of view, it's going, and now it's just risk management. So what I've done now, let me do a quick question. Any other questions, Brad? Are we how are we doing? Are we behind? Okay, Simon asked. You asked a lot of questions. Brad will answer some of them on the question and answer. We connect to an aggregator. We create our own data in our server farm. So we connect to live streaming tick data. Then through that tick data, we create our own candles. Okay, and in the examples that I was giving before, you can estimate trade slippage, commissions, all that stuff. Okay, and right now we don't do pairs and butterflies because we're focusing on single stock entry and exits and statistical analysis of that. What we're trying to do is, instead of making it fancy and hard for everybody to do, we take the card counting MIT beating blackjack approach to the market. We're just able to ask questions that no one else is able to ask and answer them in the way that I was demonstrating before with the backtester. So instead of writing like a script on how to trade Apple, what happens if Apple doesn't trade well for like a year, which can happen? What if it does nothing? You've got to be able to find, you know, these guys when they start to go or as they start to break out. And that's what we do, and we're the best at it by far. So on the channel bar, again, whether it's ETFs, whether it's that or anything else that you want to do, it's very easy to quickly get a feel for what you want to find in the market. And of course, also access our live trading room. But over the years, the most important thing that people have asked us is the following. They said, guys, you have the most amazing tools and technology that I've ever seen, but I just don't have the time to set it all up. And I don't have the time to do it. I just need some signals that I believe are good and I can follow. So remember, I'm going to bring this up. So a year ago exactly, we gave birth to our artificial intelligence engine, Holy Grail. And what our Holy Grail does, in essence, is she is the culmination of all of our technological innovation to give you a script by which to play. She is like your Doyle Brunson in the poker room, or playing golf with Tiger Woods, but not the Tiger Woods that's playing now, the one that was, okay, Spieth, sorry, like Jordan Spieth. What you see here is strategies, and we kind of have a name for them. There's horseshoe up, where you can imagine the signal is a U-type pattern, nickelback, where something comes back to you or pushing through resistance, tailwind, etc. These are kind of names for just mnemonics. But this was today's results, for example, all live streamed so that everybody saw it. So today the system had 2 trades in horseshoe, 2 in nickelback, 2 here, and this is what it actually all looked like during market hours. Let me move it back here. So this is your play-by-play. Now what I'm going to do is I'm going to sort it by time. So from the morning, let's just talk about how many potential investing suggestions did our AI give our subscribers today. There was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 total. There was a total of a flow of 19 potential trades. The total of these trades, had you traded 1 share, would have given you $2.68. That's how many points net you won if you add all of these risk-on profits together. Now, something that was really amazing, and this is again going back to the what I was trying to showcase before. We are statistically probing the market, not through indicators, and that's why things like Chaikin or Bollinger, they're meaningless to us, because all of these people are it's just a name, whereas we are data. Until you can take a Chaikin indicator, right-click, and run it through 2,000 simulations in a minute, all it is a data point. So what we're showing you here is the AI said, hey, at 656, buy ZGNX at 980. And this was the trade, and this is what it looked like today during that buy point. The next one was USNA. So it also trades completely different. The AI trades different things. It all depends on the statistical setup. Okay, here's another one, OCUL. And this one, the AI has been trading since this day. So it's told you since the 9th to be in it. 1, 2, 3, 4, 5 days. Again, all of these trades were happening in real time. So at 7:38, the system says, hey, get long, CAA, pushing through resistance. And these are the different exit reasons, and there's two modes, risk on and risk off. Risk off is if you are much more conservative and focused on account preservation, you would have done less had you gotten out of everything exactly as the AI said for that kind of scenario. But you can see, since risk on was profitable most of the day, the idea was to let the volatility work for you. Okay? So that's what we bring to the table. Freedom from SPY, freedom from AAPL, freedom from GOOG. You're going to see things and be aware of things that you've never seen before, but for a good reason, because they have potential. Okay? Things that, like Monroe Muffler. You know, look what happens when this goes above this level. It's a simple process of rinse and repeat. Rinse and repeat. Never did I write a formula. Never did I right-click and start doing all sorts of crazy stuff. Here it is. You have ZGNX, the price, entry price, exit reason. Everything is done for you. This is your guide. This happens every day. And look at the statistics today. Out of the 19 trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 were technically profitable. But look at the size of the losses versus the size of the gains. And again, this is not just us riding, you know, a bull market of a day. Bull market's great, but the S&P, and I'll show you, gave you 1.19. So even in risk off mode, we beat it. But in risk on mode, which is where you really let the volatility work for you and you can see it all in real time, that's where you really take it to another level. So let me this AI that I'm showing you right here, this is the AI channel, and what I'm going to do is, again, I'm going to move these windows away. I'm going to close them actually, and I'll show you that you can go from any channel like this to, if you have our premium service, here's your AI access, and this is what it looks like so that you can actually, you know, invest. When the trade first comes in, it pops into the open, and so every trade comes in real time. There's an entry time, long or short, which of these strategies did it, the last price, how long you have till the stop, etc. I mean, this is, again, like the Tesla assisted driving. That's what it's designed to be. It's not a black box, although the analytics behind it are constantly evolving. In fact, one of the really cool things is that while you and I are sitting here discussing the future of investing, the software in the server room right now is going through all of these trades and modifying all of these strategies, which will then compete tonight right before the open to see who's going to play tomorrow. So risk on mode and risk off mode. Great question. This is a way to describe how you can interact with the software. So every day, one of these two will be bigger, risk on or risk off. Risk on is basically if you buy the stock and hold it to the close. So it's like a day, like a trade for the day. The idea is that that way you're letting the volatility work for you. That's what risk on means. Risk off means that you're being very conservative, where you want to make sure you protect your profit. So for example, in ZGNX, these trades, they have a time stop on them as well because we're trying to maximize your return. And the idea is that here you could have in 50 minutes have made 30 cents on a $9 stock. That's a very significant percentage movement. And at one point this was actually like somewhere around 16% today because it pulled off a little bit. So the software throughout the day is monitoring all these kinds of patterns that statistically are viable. And then as something appears to meet the pattern where there's a statistical edge, just like in beating blackjack in Vegas, the software gives you the signal and you go in. It's that simple. Forget the tools and use the numbers. Okay. So Jack, the software doesn't tell you what options to use because again, the software is aimed at stocks, but on the options channel, yeah, where did I put it? Right here. Now on the options channel, we're showing you which stocks are just behaving unusual on the options side. So here, just incredible volume where there usually isn't any. That's typically a tell, like in poker, of some kind of information flow, because when someone speculates for the most leverage, they typically do it in the options market. And here again, you can see what the put-call ratio is, and that gives you hopefully a little bit of an advantage in terms of, well, which way are they speculating? I mean, here you can clearly see that for SCG, mostly on the put side. So the idea, guys, is simple. Put away all the right-clicking and marking up your charts. Your eyes tell you everything you need to know without all that garbage. Okay? Your eyes are your best tools, and we try to put as much in front of them as possible. And then simple things like just visually seeing, okay, this is over the resistance, and just marking it up. Rinse and then repeat. In the presentation, I kind of go over a little bit of what these signals look like so that you can slowly see where we're coming from, which is finding great opportunities on the long side or the short side. It really does require that in-time processing. In other words, you have to have that streaming real-time data to make new streaming real-time data. Imagine asking, your current vendor, hi, I want to see when a stock is making a new 5-minute high 2% above the 20-day moving average. That's what we do. And we can then take that kind of information and see if that's a signal. So, of course, the software is also customizable. Like, again, you cannot imagine. You can make your own symbol lists. You can do anything you want with the windows. And the AI works. I mean, it just consistently kicks the market's butt. Here from the 17th, we just had our open house, and here's our performance, AI versus the SPY since 2017. This is how we've been running. So you can just kind of see what's going on and why we are the fastest growing financial fintech software as a service company. There is nothing like this, and it should compel you to change your approach. Okay? Super simple to get going. It starts, you go to our website, all the download information is there. It's a paper-thin client because all of the data is being processed on our server side. And our support is valet support. I mean, we understand what you guys are doing, and therefore, from our point of view, our key is to demonstrate so then let you verify and then make your own decisions. One of the ways we do that is we provide Trade Ideas free trade of the week every week, where we use our AI to isolate stocks that we think have long-term potential. And I believe the one that we did this Monday was WTW, Weight Watchers. And again, there's the part of that proprietary concept of understanding what works and the ability to constantly change the ingredients. You know, that's the real difference. You make a system in TradeStation, and that's your system. Here, our system is constantly looking at itself, modifying itself, and then making itself find the opportunities better. It's like always changing your lenses to make sure that you're seeing the data the best way. It's impossible for our software to continue to lose money because it's always going into the strength of the prevailing wind mathematically. You know, our software doesn't think the market's bullish or bearish. It doesn't care. If the market turns bearish, short strategies which aren't working right now will start to be working, and the software automatically adjusts. That's your freedom. That's what you want. You know, you don't want to be right. No one can predict the stock market. It is impossible to predict the stock market because the future is ultimately unpredictable, but that's okay. That's not, you don't need to predict the future to have huge wealth in the market. You need to react better and understand where probabilities exist. One of the ways that I like to use as a metaphor for this is a really popular show called Criminal Minds. Do any of you watch that? Don't everybody answer a yes at once. Anyone familiar with the show called Criminal Minds? Has anyone ever seen it? Okay, perfect. And for those that aren't, basically, Criminal Minds, the theory is there's something happens, a serial killer is out there, and the FBI has a team of behavioral analysts that use behavior analysis to figure out where the serial killer is going to be, or where he might be. They don't know, but they're using clues. We approach alpha pattern recognition just like that. Those strategies that you saw on the AI are like our behavioral analysts, and they're looking for the kind of behavior that rewards people that do the kind of speculation that we all do. Okay? And that's your advantage. We approach it differently. You know, you go to another vendor and they're going to say, well, we've got the most indicators for you because we know that you need the kind of tools to forget that. You don't need any, the market has gone beyond the tools. It's like cars and horse and buggy. We've got Tesla automated assisted driving, and now you have artificially intelligent trade ideas, automated active investing. So the most important part through all of this is access to our team and how much the software costs, of course. And Jerry asked the question, and I'll get to that really quick. Before I do, though, just a real high-level overview here. We're very accessible. We're on every media, whether it's Instagram, Facebook, or just plain email or phone. Whether it's, I'm at Trade Ideas 1, and our corporate account is at Trade Ideas, and then one of our assistants, Steve Gomez, is at Today Trader. So we have a whole team that's ready to help you get started. The trading room that we talked about before, it's ready in the morning. Right at the open, even before the open, come in here from our website and go right into the trading room, and you'll see exactly what everything is about. These things right here, these are the things that right now, these strategies, they're fighting with each other to see who gets to play tomorrow. It's called the quantitative combine, okay, where they're trying to isolate the statistics, the 67%, the 64s, etc. This is why these strategies have made it, because through the things that I've showed you on the back testing, after the AI gets through with it, these are the numbers that we deal with. something that has a 67% chance or a 62% chance. That's why our clients are able to profit. And that's why the curves are so deviant. Dan B, I'm not even sure what that question means. How many whipsaws per trade? Whipsaws are just fluctuations in price, and fluctuations in price cannot be predicted. Whenever you buy or sell short, you have to expect that there will be fluctuations in price. Therefore, it's the risk management that is critical to your success, which our software helps you do. Okay? If you look at these exit reasons, right, reduce risk and time stop and risk on versus risk off, the software is constantly communicating to you and saying, hey, here's what I would do, hey, here's what I would do, to help you. And then you have to make the decision of what you are then going to do. So let's see. I think we're pretty close to the end. Scott, do you want to pop in for the very last part?
I think you've got it pretty well covered. There's lots of interest in the trading room today. I want to remind everyone the trading room opens 30 minutes before they open in New York, so it's open at 6 in the morning Eastern Time. Just go ahead to trade-ideas.com/trading room, and we've dropped that link in there several times. The slide you're looking at, we weren't really going to include, but it just kind of enforces the value of what we offer. When you sign up for a year of Trade Ideas, or even just the regular premium monthly at $188, you're getting more than $3,500 worth of annual platform access, and you can get most of that just starting at $99 a month. It includes an hour of training, one-on-one training. So as soon as you become a subscriber, when you sign up for Trade Ideas, go to support, click on training, and you can get that hour of training. And that's something that piecemeal is $99 an hour. Most trading rooms charge $99 a month. That would be $1,200 a year to belong to a trading community like we offer. And it's free for non-subscribers, including and as well as subscribers. It's super popular. Now we have usually about 400, 500 members in there on a day-to-day basis. So check us out at the trading room. It's a really great introduction to Trade Ideas. And you're going to be receiving the Trade of the Week next Monday. We're going to add you to that. You'll see the value in that. So, please check that out. And when you become a subscriber, you will see how we are very different than the other platforms. We provide better data than Bloomberg, and we don't cost $3,000 a month like Bloomberg does. Dan, thank you for the presentation. Any questions, email us info@trade-ideas.com. Follow Dan on Twitter at TradeIdeas1. We'll have the recording up tonight in a couple hours. And like us on Facebook too. We occasionally post some different content there. And you can share that with the rest of your friends on Facebook too. So,
thank you very much, everybody. Thank you, Scott.
Yeah, have a good one, Dan. Thanks, Dan. Thanks, Brad. Thanks, everybody, for attending.